The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. The E-minis have just made a leg deep, possibly a peak D in the 120-minute chart. You're going to watch that real closely. Hit that 9-period exponential moving average resistance right on the button and just being repelled from that level. So we're going to see what happens because that first hour opening big gap up is going to be a very big issue, either on the upside or the downside, and I'll explain what I'm looking at in a few moments, but let's just run the numbers. Thank you, Steve, for 2 great hours. Today is Wednesday, and of course Wednesday I'm followed by Larry Pesavento, then you got Daryl Martin, you got Dave White, you got Dave White, and then you got Tom O'Brien, 4 o'clock till 6. I think there is a gap in that hour, but 4 o'clock till 6 wrapped up by Tom O'Brien. Who else could do a great job? Tom O'Brien's the one, and of course, right here at TFNN, we've just got numerous services, but most of all, let me just go through this right now because I forgot to review it at the end of my show yesterday. I did it at the beginning. Some people did not hear it. So I'm going to be talking tonight at the Boston Investors Group. This is the Wednesday meetup. I'm the guest speaker. I'm on, it starts at 7 o'clock. I'm on at about 8:15 or so, 8 o'clock, 8:15. It's building E51, number 325. It's a 3rd floor in the Sloan building. And that is corner Wadsworth and Amherst Streets off Memorial Drive. And I don't think you need much more than that. It's at MIT. I forgot to say. It's at MIT, Massachusetts Institute of Technology, in room 325. So I'd love to see you there. And it's got the number of people attending from about a few days ago, and it's quite a lot of people. So I'm really looking forward to it. Looking forward to seeing you. A number of people emailed me, and I gave them the address. It's fairly simple to get to, but of course, being MIT, you can always get lost. It seems to be what they strive for over there. If you've ever gone through the labyrinth of buildings in the main building, it is unbelievable. All right, so let's go through the numbers. You've got the Dow up 79. It was up 128, 130 earlier on at 14,839. S&P is up 11 at 1599. No, S&P is up 7 at 1595. Comp index is up 18 at 33.66. Now, this is interesting. Gold got smashed. Remember yesterday we were looking at the GDX, and I was talking about a trend line to the downside, what I call the inside track with a channel. And I said, normally that's what you'd expect to go to. I'm not actually expecting that. In fact, we go to the very low of the left side. We'll look at those in a minute. But what I'm thinking here is that on a very short-term basis, I believe that we could be seeing some kind of low, a V-shaped low being formed in gold, and that would coincide with leg C up in the dollar, which means that maybe it's the start of a move but has to be retested, and then dollar will make leg D up. Let me just go through these numbers and I'll actually show you the charts. It's much better that way. If you're looking at Tiger TV, what you're looking at right now, it's the Dow and the E-minis, S&P September futures, E-mini, and the 120-minute chart is on the right. I'm going to take that away for the moment. Whoops, and I took it away on the actual screen. That was silly. And now this is what I wanted to show you. The GLD has plummeted to 119.28. I want to talk about that in another context in a moment. What I really want to talk about at this particular point is that if platinum continues to fall, if gold and silver continue to fall, you've got the commodities, that whole commodity sector, highly vulnerable. Normally you would just automatically say, hey, they're vulnerable, dollar must be going up. But you know what? There's a certain independence that might be formed at a certain point because the dollar's rallying. But let me show you this chart. I keep showing it and I shake my head in total disbelief. It's not this one. It's not that one. Let me get these charts out the way. It's this one, right? Oh, what am I looking at? The dollar. Where's my gold? Oh, I lost it. I'll find it in a minute. It's the chart that has... no, it's not that one. Oh, I'll find it in a moment. It's the chart that I have of the UUP. That's the dollar bull ETF, and the GLD. I'll find it in a moment. In the meantime, let me just say that when I'm looking at the different charts, if you look at the leg C up in the dollar itself, in the dollar index, look. With such a move in gold, wouldn't you, if I said to you gold has just plummeted hundreds and hundreds of points, the last high in the dollar index was at 84.50 back in the week of the 24th of May. Where do you think the dollar is right now? Personally, if you ask me, I would say dollar should be up at the 85.50 to 86.80 level, if not higher. And that, to me, proves the point that I've been making for such a long time. I believe that the dollar is running strongly, but you can't see it because the Fed is purposefully trying to knock that dollar down. Just as bonds, if you asked me about bonds a year ago, I would say major top in place. Bonds, what was the high in the bonds? Let me just check it out at US. I'll go to continuous contract if you don't mind. Back in July, was it? Yeah, July of 2012. It says 150, but let me just take the TLT. 132.21. Where would you think that the TLT is right now with the market having rallied so strongly? And I would turn around and say to you, wow, 105 to 103. And in fact, look at it. It's at 108. So the Fed has still been trying to prop up the bonds. And at the same time, you've got the dollar being knocked down. So just to remind you again, tonight, 7 o'clock, I'm on at 8 here in the Cambridge area, Massachusetts, MIT. It's the Boston Investors Group, and I look forward to seeing you, and I'll be talking at, I come on at about 8. There's a terrific speaker, Investing in High-Yielding Securities and Funds by Steve Carhart. So I'm going to go to our first caller. We've got Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
Good, thank you.
Good. So, just one quick question to expand on your E-mini Peak D.
Yes.
You also expect, because what I was kind of waiting for to go short again was a Peak D in the 120-minute chart of the SPYs, the diamonds, the Qs, and the IWMs. They're all in Peak C, at least if I'm reading correctly, and this bounce that we're having. Do you expect a D before we follow again?
Well, that's the very big question. And, in fact, it's only leg B up in the SPY. And your question is on the SPY, and the SPY has only got leg D up. My anticipation was, and I'll be proved either correct or incorrect, was that the gap up today could be followed by the best-case scenario of a doji tomorrow. And then we have a pullback, and that pullback will be the real test of internal strength or internal weakness. Now, as I say, that's my stance, and I did something accordingly for my subscribers this morning. One has so far worked out quite nicely, and the other one hasn't, and we're going to see exactly what happens. Now, let me just go through this. When you're looking at the SPY, the 9-period exponential moving average on the daily is 160.47. We went today up to 160.18, so that's 57. Call it 50 cents to go. If, in fact, the SPY makes a V-shaped recovery here and powers right through 160.46 by the end of the day, going to about 160 I have to say 160.80, I'd have to be very impressed with that and say, wow, 161.25 is the 9-period moving average on the that's the weekly chart. That's pretty good to be able to have just a sharp move down like this, and then a very, very powerful move to the upside. I have to consider that you would be correct, that I have to wait and have patience for the full wave count. But when I'm looking at the pattern that's been formed, I'm showing here, folks, what I'm doing. If you want to look at these charts, this is the 120-minute from the peak D top that was made recently in the SPY at 169.08. Let me just type that in, 160.908. I believe that was the 22nd of of May. So what I'm looking at is that all of the rallies failed. The best one was this peak C, you can maybe call it C1, C2, that was the day of the Fed. That was right on the 18th. The 18th had this little bounce above the 9-period moving average, but couldn't hold it. So I'm anticipating that there's a chance that we don't actually make a full D. However, if the what I'm looking at here is that the histogram of the MACD has gone positive, and I have to consider that is confirming the strength in the 120-minute chart going to leg B, and I'm just going to have to deal with that. Now, there are a couple of things that are going on. If I look at my Dow Quartet, GE is had a very strong gap to the upside, and where is it now? It's down a penny at 23.11. If I look at IBM is having a rally, but it's kind of pathetic at 105.34. If I look at Triple M, this is my Dow Quartet Index. I call it an index, but it's nothing really. It's just 4 stocks. Then the Dow got repelled at the 9-period moving average, pulled back. It's halfway into the move up today. It's pulled back. And I've got this as a really strong potential as a possible peak F in the weekly. Leg E in the monthly, and it's been one of the best Dow stocks. And if I look at UTX, it's saying not a bad move, but I couldn't hold above the 9-period moving average. And as I say, the day is young. We've not even done 2 hours worth of activity in the market. So let me just sum it up quickly. Your anticipation was that there should be a rally that in the 120-minute charts should at least go to a leg D. And whatever the daily is, that's okay, because we could be dealing with the 120-minute chart. I'm going to suggest that that's not a bad thesis. I'm just not sure that that's the way it's going to be. The Dow Diamond's in leg C. The SPY is in leg B.
Yeah, we had there was a weird tick yesterday of 160.10. I don't know if that changed anything, but in the SPYs, I don't know if that got erased or if it's still there, but it was kind of a...
Oh, really? I didn't see that. 160, no, it did not... 160.10 yesterday?
Yeah, at the end of the day, yesterday, in the last... I think it was the last 120-minute bar from yesterday. I have a 160.10. I don't know if that really would have impacted anything anyway on the chart.
I didn't get that. That might have been an error.
Okay, because it's still on my screen.
Now, one of the problems, of course, in data feeds is that sometimes we would concur and sometimes we got differing letters. But what's very interesting is if you use the chart patterns and you use the technicals, very often we will come to the same conclusion, except in rebounds in a downtrend. You can expect that they're going to fail early. So I'll try to answer you. Listen to the show. I'm going to try and extrapolate and go through all the different indexes, and we'll see if we can make some sense about it and see where it should turn around. Thank you for calling, Mark. Okay, we'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. What we're looking at right now is the GDX. The GDX is the Market Vectors Gold Miners ETF. Now, on the way up from 2008, from the low of 15.83, back in the week of the 24th of October, 2008, it had just steadily, I call it walking the 9-period exponential moving average, but actually that's not really true. It's really it's a 9-period moving average that progressively moves higher as the price essentially does a sine wave formation with higher highs and higher lows. On the way down, it essentially is a barrier, a repellent rather than a propellant line. Right at the end of the move, back in when everyone was saying, should I buy gold, should I buy gold, back in July of 2010, 3 years ago, when it started to break out above the 48-49 area, the GDX then was hugging the 9-period moving average. It made a cup, which turned into a W, a soft W formation, went to a peak E at 66.98. Now, what I love about this is, look, you see the midpoint that I've chosen over there, right over there, and that candle right there. Let me just move that right there. You've got a left side, right side price time match, which is extended just a tad before it broke down. So it's about 4 weeks, going all the way back to 2010. In 2013, it missed it it broke down on the week of the 14th of April rather than the week of the 15th of March. So, what I'm looking at here is at the key support level of 2120, which was formed the week of December the 5th, 2008, that's going to be very important because it's getting to the last two major support levels. And what I said yesterday is my suspicion is before a really good bounce is that we will go down, but we probably won't hit 1583. We'll stop somewhere, not we, the GDX, which is, this, as I say, the market vectored gold miners ETF, will stop somewhere between 2120 and 2120. Yeah, and above 1583. Later on, there's a chance, maybe in August, that we actually come down and we pierce it. So my suspicion, now let me just jump, I'm going to jump around here because this is a very important moment in the market as far as I'm concerned. In fact, I would even go so far as to say last week was a really important close on the week. And this week's close is going to be really important for a lot of reasons. One of the reasons being the volatility index, the price of the Dow and the S&P are going to be telling me a great deal about the parameters, whether we are looking at time and price, just time, or just price in the consolidation. I do call it a consolidation because in the longer term, I have peak C probably be made, and almost certainly going to be made this month. And then I'm expecting leg D to higher highs in the Chapman Wave monthly chart. So now, what I want you to show you is this. In the dollar DXY, the dollar is in leg C. Not a very great move, this. A nice move, but not great. So what, 2.5 points? But let's call it 3 points for argument's sake. 3 points on an $80 stock. Yeah, it's nothing. Not when it is the harbinger of bad news for the commodities and all. So if I'm looking at this, I'm saying the dollar so far has made a left side, right side price move attempt to try to get into the area that would be the high of 83.38 is really important, but that's not really the issue. The issue is in the daily chart, how on earth does the dollar rally and then power through 84.50. To me, that is absolutely critical. If the dollar finally does, in this move, power through 84.50, and it does it in the next week and a half by, what's today, Thursday, by Friday a week, now I'm going to give it more. I'm going to say by Tuesday, a week from next Tuesday, just give it some time. If it's able to do that, I suspect that we're going to be looking at something that is debilitating in some of the areas. And what would that area be? I'm looking to see whether or not the TNX, now I can go to those other charts. The TNX, which is the 10-year Treasury note interest rate, has made a move here that says at 26.57, the high of the 24th, if it takes that out, I have to renotate that and consider it's a new leg C up. This has just been a monster move. If I go to my black background charts, you see the yields right here? This is leg B. The way I'm trying to assess it right now is to say that there's a real good chance that we actually make a peak B this week because next week there's no new recovery high in the weekly. And how far we pull back is going to be really important. So you can see we have got a bunch of things going on, and I'm going to, oh, there it is right there. I had it all the time. I'll talk about the EUP, the SPY, the TLT when we get back.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Target Technicians Hour. Okay, so now this is what I wanted to do. The volatility index, the VIX, has pulled back. I'm going to have to call this a G in the daily, but the 120-minute chart, I see. Wait a minute, I've got 2 different things going on here. A, B, oh, I call that, that's not correct. That's from, oh, I've got it. Okay. I knew I did something differently in the one and the other. Normally I would not do that. That's A, there you go. There you go. So the volatility index in the 120-minute chart, and that's what I had on my A, B, C, D, E. A, B, C, D, E, F. Okay, made a peak F top. That's what I had on my subscribers get every day. They get this. This is what I call the overview section, overview and what to watch for, a market today section. And what we're looking at here is that in the 120-minute chart, it made a peak F at 21.91. It pulled back to today's low of 17.13. Right now, the VIX is at 17.81. Moving higher, stair-step higher. Remember, we're down in the 15s, 14s. Now, all of a sudden, even lower than that, 11s. Now we're moving up in a stair-step fashion, raising the base. And that's saying to me that in the overall look of what we're doing here in the general marketplace, the selling pressure, I always call it selling and buying pressure. To me, that's the volatility index, selling and buying pressure. The selling pressure has started to find some support. To me, that is very important, because at any point, if there is a break into the 22-23 area in the volatility index, that's when you will start to get the next sharp leg down in the general stock market. If for some reason it's able to get back to the 16 to 15 area, that's going to be support. And that's really what, if you're a bull right now, you need to be looking at that, because you really want to see the market. You want to see if this is going to be peak C in the 120-minute chart there, or that right there I'm pointing to. Then you want to see D, and then 15,000, so I'd say 14,990s to 15,010 would be the very strong resistance that I'd be looking at. Days young, anything can happen. You can see the change of character will be, as we've seen lately, that buying pressure keeps being met with selling pressure. The big difference is over the last 2 days is that the turnaround to the upside and the pullbacks have been met with enough buying to keep the Dow up close to plus 80, plus 90, plus 100. That's what happened yesterday. So now we're going to be looking at this closely. The other aspect that to me is extremely important when I'm looking at the market itself is, what are the sectors? Is the IYT, is the transportation sector acting well? Well, the transportation sector has pulled back. I have to call that a peak G in the waveform in the weekly at 117.30. Only leg C, probably peak C in the monthly chart, and that says bullish looking out. Short term, you've got to think of consolidation, number one. And number two, you've got to say that the IYT, the iShares Dow Jones Transportation Average Index Fund, has 104.40. It's at 109.32 right now. That is going to be the key area. In fact, what I would normally do, I'll do it right now for you, we'll do it right here live, is that this whole area, right from that candle on to that point there, to the high, going out to, here we go, let's do it this way. It says that there could be a consolidation. Actually, I don't think I've drawn that correctly because my eye tells me no. Let's go back. There it is, 1-1. There it is. That to late August, we could be seeing the transportation index in a trading range. It could have a resistance at 111, in the 111, 112 area, and it could keep finding lower lows as support, and it could take time. It could take a good month or two to try to find some support, but if it breaks 104.40, it goes straight down to test 103.3. So right now what I'm looking at is the daily is very weak, and the weekly is weak, even though there's a nice candle so far this week, but I think that's going to fail. So the transportation index, not looking very good. Let's go to the IYR. IYR, of course, is the REITs, is the commercial REITs, the iShares Dow Jones U.S. Real Estate Index Trust. Made a peak D in the monthly, a peak F. Now, F ever, you're looking for a move that says Eiffel Tower. That's when it goes straight up and straight down. This is the one. It ran up the 9 EMA all the way from 60.84 back on the 16th of November of last year. It went all the way to 76.21, and it's trading now 76.21. It's trading right now at 65.28, but it hit the other day. It hit 62.71. That's 14 points. That's about an 18% correction in a very short period of time. That says any bounce has to do a bunch of retesting. So that's your other very important index, at least for me at this particular time. Let's go to Rick in British Columbia. Hi, Rick. How are you?
Hey, how are you, Basil?
Very well, thank you.
I kind of think I know what's going on.
Tell me what's going on, Rick. The dollar's rallying, the euro's pulling back. What else?
I think so. And you know what? I think tomorrow, I just want to show you. Let's put the GLD on. I will. Okay. And if
GLD, folks, is the Spider Gold Trust, and it's trading right now at 119.35, down $4.12.
Yeah. No, I'm not trying to be cocky. I know what's going on. I'm just trying to say, I'd like to give my assessment, see if you agree with me. Okay, now, it's not really a head and shoulder pattern on a 6-month daily, but we're going down on a lighter volume. It looks to me like the gold contract's going to about 1,200, and I don't know what the GLD number is because it's a little different, obviously.
Yes.
But I think we can get a bounce back to 130 on the GLD. And And you know, I mean, we're not going down on volume now. These ETFs can fool you with volume sometime, but you see what I'm saying? Like we're you know, it would be a natural bounce to 130. Do you agree with that or not?
Let me put it this way. There are two scenarios as far as I'm concerned with this contract that I'm looking at now in the GLD weekly. Number one, absolutely key support levels have just been smashed. So now you have to look at what would be the most important level to look at on the downside. This was yesterday. And I'm looking at the GLD and I say 127.80. Well, yesterday when I was discussing this, the GLD hadn't gapped down. It was still trading at about 122.80 to 123. And what I'd said is that having taken out the left side low, that's going to be really difficult. My eye tells me that we're real close, but the price point is very difficult to say. And that means that the 9 EMA in the daily is now up at 126.05. The gap is at 126.38. So you can see that the gap between 130.38 and 126 is going to be absolutely important, and there's a 128.12 would be the one of the moving averages of importance. But let me pose this question to you. There are
I think the dollar is going to pull back. That's what I think.
I think it will pull back, but not yet, because it's still in leg C up. It needs to make D.
I don't think the buy is today. I think it could be tomorrow or the next day is all I'm trying to
Right. Well, that would fit the scenario that I'm looking at. Now, let me explain what I'm looking at. This, to me, absolutely is key. So when I spoke about the stochastic yesterday in the GDX and the GLD, I said my biggest concern is that it's in the single digits, which shows no sense of strength whatsoever. More importantly, is that the weekly chart is also showing no testosterone there. It is just, this is not good. And the MACD is still expanding. So it says either there's a catalyst for a V-shaped turnaround, and that V-shaped turnaround cannot make an arch formation and then pull back. It has to be a V-shaped turnaround that continues for 6 to 8 weeks, and it goes straight up, and it goes right, not through 131, which is the 9-period moving average. It has to go through 139 to say, now we've made a decisive low in gold. And the GLD is, of course, trades...
Well, I agree with your assessment on the GDX, though. Earlier what you said was, you mentioned, okay, we're getting close here.
Yes.
But then I think we're going to get a bounce, and that kind of coincides with what I'm saying. And then, like maybe in August, we go to new lows, and I think gold pulls back to 1,000, 1,050 possibly.
You see, now that's very interesting, because my thinking for a long time has been that gold, I'm going to go to the GC.P contract. This is the continuous contract. The PKF in the Chapman wave in any monthly chart, if the technicals fail, that can be deadly. That usually says hat-trick top, meaning it is a top of consequence. It is a top that will not be seen for a very long time, and all you're going to be looking at is lower lows and lower highs for quite some time until you get a major buy signal. It means it is out of favor. Now, what out of favor means that no matter what anyone is doing in terms of buying gold, the majority, the thinking, the tide, the trend, the fashion is not to own gold at this particular point.
Yeah.
And once that changes as a statement of trend, all you can expect are reasonably decent, nice percentage spikes to the upside. Hopefully they can last a little longer than just a pop-up, and then make higher lows and higher highs for a period of 6 weeks to 8 weeks. Yeah. We did that only to a certain fashion when we made that decisive low, that volume, what I call the volume low. We went for 46 days without breaking the low. When we broke 130.51, that was all over. Now in the monthly chart, you've set up that Roman candle that was pierced, that Roman candle, that's what I call Roman candle, from April of 2013. The low was taken out. The left side of 1347.50 on the continuous contract has been taken out. And if you look at this, I don't think we're going to the 200-period moving average at 998, but at the same time, that whole area with a doji candle of March of 2010 between 183 and 1128, to me, that is going to be an absolute focal point if there is a bounce and we start to come back and make new lows, or, and this, I don't even want to talk about it, if there is no rally whatsoever in the next couple of days, and in fact, if gold just keeps going down like this, it means that not only people throwing in the towel, but the shorts are becoming emboldened. And when the shorts become emboldened, it means that you go to a climactic low, but it means that it is a climactic low because it has broken the percentage decline. In this case, it will be decline and not a spike up. The percentage decline to the downside. So whatever percentage we've seen thus far in gold, if there's going to be a climactic low, one that says, okay, now finally those stocks, I mean, if you look at GG, which is Gold Core, I mean, look at this. Gold Core is about to make a full complement, a complete arch formation. At this point, GG is trading at 22.43. It made a high of 56.31. This is a terrific gold company. And it's going to that terrible decline that had a pullback down to 13.84. No, I'm not saying it's going to 13.84. I'm saying that was the trend line, 200 period exponential moving average support that it powered off going into that huge move into 2012, and now look what it's doing. Now, the other thing I wanted to say is I know it feels terrible, but actually this is just a very normal arch formation at this particular point. It's taking almost the same time as it goes if you choose this particular point for the midpoint to come down than to go up. Now, obviously, from the high of GG that was made in, what did I say it was, back in September of 2011 at 56.31, from that level, it is a much quicker decline. But the actual part, the pattern looks very orderly. I mean, you could take any, GOLD, you could take any of them. GOLD held the best. It's the last to break down, peak D in the daily, in the monthly, and that has a target. It's at 61.24. If it stops the same percentage above the 200 period moving average that it did back in 2009, that would say that the level of support that's absolutely important to hold is 55.06. So that's just
Basil, and real quick, and this will be the last thing. If you put the SPY on a 10-day hourly, and like you agree with me that you think the dollar is going to pull back, but not today, either tomorrow or the next day. We'll talk about. Okay, and I mentioned
within a few days. I can't be the market. I'm just saying this is leg C. There should be a peak C, and then it still has to be a leg D. Okay.
Okay. Now, if you put the SPYs on a 10-day hourly, you will see that gap up there at on the SPX that's around 1630, and you'll see it around 163 and change up there. Right. And you'll see that we broke that on lighter volume, okay? And if you just look at today, for example, we went up and everything's on lighter volume, so we're pulling back right now. We'll fill the gap of yesterday and possibly even touch the gap of the other day of the day before. But and with the dollar pulling back, you got window dressing coming up like we got a July 1st holiday here, but you'll have window dressing in the U.S. And Faber, the guy that does doom and gloom and all this, the real bear, he mentioned 2-3 days ago, but I think we'll bounce to 1630. So that, especially if the dollar pulls back, that'll help. So this is all I really have to say right now.
All right, those are very good points, and in a way we kind of discussed it a little earlier with Mark, but thanks, Rick. Hey, good observations. Thank you very much for calling. Always appreciate your call. Call again. Thank you. That was Rick in British Columbia. That's the Dow's up 84, S&P's up 9. S&P's holding up kind of okay right here. I'll be back, 877-927-6648, and I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Let's just do a little review. The TYX, the 30-year Treasury bond interest rate, is in leg B. I have to call it leg B. It could be a G, but I'm calling it a leg B in the weekly chart. If that's the case, then over the coming weeks we're going higher. Simple. The yield is just going higher. The 10-year leg B, same thing. Now this is extraordinary, and now it doesn't have to follow exactly. It can fail, but the 5-year has gone from 6.41 to the most recent high, which is 1557. So that is 1.55 from 1.55, and that's from 0.6. So that is huge percentage. Now, this is even more important. If the yields are going higher, there's a very interesting that's just happened. The MUB, which is the iShares S&P National Municipal Bond Fund, has had a spectacular move from 100.26 to today's high of 104.7. That's 5%. Unfortunately, just had a spectacular move down from a high of 114.52 down to 100. Let me just say that again. 14. Yeah, that is huge. These are bonds. These are municipal bonds. So you got to respect what's going on. That's number one. The second thing I want to talk about is when I go to these charts here, and I'll be talking a lot more about it tonight at the meeting. This is at the at MIT in Cambridge. I'll be talking at the Sloan Building. It's for the Boston Investors Group, Building E51, room 325, third floor. Starts at 7. I'll be on at 8, and it is the corner of Wadsworth and Amherst Streets off Memorial Drive. So I'm really looking forward to seeing many of you here. You told me you're going to be there. Now look at this. This is wood. This is the iShares S&P Global Timber and Forestry. That's made a peak D top in the weekly chart. The last one pulled back in time, not price. This is so far pulled back in price and a little bit of the time. But it's peak F in the weekly chart of the home builders in the Philadelphia Housing Sector Index. So that, and it's broken support. So it says to me, we at least there, I have to consider that the home builders are going to take time. Now, if I'm looking at the UUP weekly chart, it's got a long way to go. It's at 2251 to really break out into the 2330s to break this whole resistance area. Can it do it? Yeah, it sure can. But so far, it's acting okay. Not great, but okay. But peak E in the weekly chart of the SPY, and here the TLT breaking down below support. I have to respect these charts and say, if you put the sum of put the parts together, the whole says on more like an intermediate term basis, short to intermediate term basis, we've got to expect that after such fabulous moves in the market, that there will be a congestion period. And what does it say? It says that down between 14,385, it's a 14,844 right now. It could pull back between, I say, 14,000, let's call it 14,500 to 14,400. That's going to be really important. That's going to be the real test, and it could take as long as going into August. So that's what I'm looking at. Now, if I look at the, I just wanted to do this here. Just the broader NYL. Well, actually, I want you to do this. We're about to wrap up. And, of course, you've got Larry Pesavento, just a wonderful program, just fabulous program. You've got Larry coming up, Daryl Martin at 1. You've got David White at 2. You've got Tom O'Brien at 4 to 6. Now, I'm looking at Apple. Apple's breaking down. It's breaking down on the 200-period exponential moving average. It made the arch formation. What did I say yesterday? I can see a best-case basis of maybe another mini arch taking some time. But Apple looks to me like it's going to the 353s. That's looking out. Google. Oh, we're out of time. Google. It's made a peak E in the weekly, and you can go all through these. They've all made peaks in the weekly that says, please be careful right now. So I'll be back tomorrow. Thanks for being here. Have a wonderful day. Stay tuned for Larry. And, of course, my service is the opening call. Check it out, front page of TFNN. You can get 2 weeks free, and I'd love to see you tonight at the meeting.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.